GIFT City, as you would have heard, is fast emerging as a route for money coming into India and for Indians to invest globally.
GIFT City gives you that flexibility is that it allows you to invest in the currency of your choice and lets you to invest globally or in India. In fact, you don't need to file tax returns in India. So the fund pays tax on behalf of the investors. Through the GIFT City route, PAN card is not a mandatory document to invest. He can use his existing Bank of America account, Emirates National Bank, Bank of Singapore, whichever bank account he has in the world. I hope to launch sometime in September. Mirae Asset should be launching a retail scheme, which will allow investors access to best global markets and themes, maybe not at such a high ticket size, maybe only at about $5,000.
Welcome to the Global Indian Podcast. I am your host, Neil Borate. GIFT City, as you would have heard, is fast emerging as a route for money coming into India and for Indians to invest globally. And one of the fund houses most active in GIFT City is Mirae Asset. So today we have Vaibhav Shah of Mirae Asset to explain to us what all they already have launched there, what all they're planning to launch there, and exactly how you as an Indian can use GIFT City to invest in India and to invest overseas from India. Welcome, Vaibhav.
Thanks, Neil, for inviting me here.
Thanks, Vaibhav. So let's first discuss the inbound part. You already have funds that are active which NRIs can invest in. So what are these funds and how can NRIs invest in them?
So thanks, Neil. So typically what happens, NRIs have already been investing into Indian markets. They've been investing directly either into shares or through mutual fund route. But a lot of NRIs who live outside India, for a large part of their life outside India, they would have a large part of their investments in non-rupee assets. So their investments could be in dirham, could be in pounds, could be in dollars. And they would like to invest in their home currency rather than wanting to change their currency into INR. So what GIFT City gives you that flexibility is that it allows you to invest in the currency of your choice and lets you to invest globally or in India coming through the GIFT City route. Also, what happens, a lot of NRIs invest in, say, a Singapore fund or a Mauritius fund or a DIFC fund.
That's Dubai.
Yeah, in Dubai. So essentially, most of these funds have easy KYC rule, ease of taxation, ease of remittance of flows of money. GIFT City is trying to give all of this to the investor. So not only you can have ease of investing in your own currency, but the taxation is fairly very simple and through the GIFT City route. In fact, you don't need to file tax returns in India. Second, your remittance is very simple.
And there's no tax in India either, right? For NRI money.
So what happens is if you invest in CAT3 AIF schemes, the liability is on the CAT3 AIF scheme rather than the investor. So the fund pays tax on behalf of the investors. However, there are funds where the underlying is not shares, mutual funds, in which case there is an exemption for the CAT3 AIFs investing in mutual funds to also pay tax. So both the fund as well as the investors don't need to pay any tax in India. And only tax implications, if any, arises in their home country, which is what makes it sort of very easy for investors. And again, like one of the things I said, repatriation of funds or remittance is fairly simple. You can transfer money from any bank in the world and the money goes back to that same bank. These are all very large conveniences which are there, which is sort of prompting a lot of NRIs to say, why should I not use dollar assets? Why should I use Mauritius or Cayman or Singapore route to invest when some of the best Indian managers are based in India? The research that they are doing on Indian companies is in India. Why not invest with the best managers through the GIFT City route?
Right. So Vaibhav, let's drill down into the details. To begin with, the inbound funds are alternative investment funds or AIFs, which means that the minimum ticket size is $1.5 lakh.
Correct.
The other thing to be understood is what are the expenses or charges that you would levy on AIFs?
Sure. So Neil, at the moment the regulator has sort of allowed you to do all types of products. So through the GIFT City route, you don't need to do only AIFs. You can do PMS products, you can do even mutual fund schemes. A reason why we've all maybe started with AIF products is to test the waters. And what happens is, essentially you're trying to get an investor who's not based in India. And if a particular fund house doesn't have the requisite registrations in a particular country to accept retail application, it makes sense to at least take applications from accredited investors or sophisticated investors who have financial acumen. Hence, I think fund houses have started taking investments from sophisticated accredited investors. I'm sure the days will come soon when you can even accept retail mutual fund applications as well. So AIF is currently the route of transaction. It will sort of migrate to other products as well. A lot of other managers also accept PMS investments as well, where the ticket size is actually not $150,000, is actually only about $75,000. On your second question is
Charges, expenses.
Charges. Say essentially, when you want to get investments, you want to make your product competitive with the existing products in the market, right? Which is your product that you want to compete with. Your competing products will be mutual funds. In the case of mutual fund, most of those products are priced at maybe 1.5%, 2% or 2.25 as per the SEBI formula of based on AUM, what could be the charge structure. You would essentially want these products to be priced in a similar manner because you don't want to overpay.
Sure.
Of course, we covered a lot of advantages GIFT City gives, but you don't still want to pay a higher sum for it. So we've seen most products priced similar to what a mutual fund cost structure will be.
Okay.
And yet be able to give all the advantages that we discussed. So the cost structure remaining, you could say 1.5%, 2% is where there is the overall cost. However, through the GIFT City route, there's one advantage that you get is as the ticket size goes up, you have the flexibility of reducing the management fee. So for large institutions or for HNI investors with larger ticket size, cost structures could be as low as even 0.5. While in India, even if someone cuts a 5,000 rupees check or a 50 crore check,
it's the same.
The cost structure remains the same. Here, as the sort of ticket size goes up, economies of scale kick in and the cost structure goes down and can go down significantly.
Right. So Vaibhav, as I understand it, the GIFT City fund feeds into underlying Indian funds such as, let's say, Mirae Asset Large Cap. To give an example, isn't there a duplication of expense ratio that you charge here and there or no?
So good question, Neil. See, essentially what you try and do is when you have a CAT 3 AIF, you would want it to invest in your fund. Now the fund that you would invest will be in the direct plan. So your cost structure goes down significantly compared to the regular plan.
Okay.
So there is one segment of economies of scale. Now, what we try to do differently is that, like you rightly pointed out, if I'm just launching a product which feeds simply into one product, there is no expertise that I am providing to the investor.
Right.
We thought that that is not the way investment should be. So we created a fund of fund structure which allows you flexibility of investing across market cap themes in a very dynamic manner, where the fund house can also add value, can add alpha to your returns, and hence even if the cost structure is slightly higher, you are able to cover that by generating that much higher alpha. So if as a fund house you can add alpha, I'm sure you can justify your cost, though it can be not significantly higher cost, but if your alpha compensates for that, then why not? So it depends on how fund houses want to take this space. We took it in a very different manner. We said, let's give, if possible, more alpha and then justify the cost.
Okay. So in your case, if I add up the direct plan and the GIFT City expense ratio, it comes to
somewhere close to about 1.5%, 2%. That's how mutual fund cost will also be like.
Okay. Now, let's talk about NRI KYC and because when NRIs invest through the traditional route, they have to decide whether it's going to be PIS, non-PIS, mutual fund KYC, bank, NRE, NRO.
Right.
Over here, what's the route?
Yeah, so that's where, Neil, actually the life becomes very easy. Now, first, you don't need a mutual fund KYC. In fact, through the GIFT City route, PAN card is not a mandatory document to invest. So forget about Aadhaar card and the other sort of documents because NRIs will not have those investment documents. What you simply need is an ID proof and an address proof. And in most cases, NRIs will have a passport which works as an ID proof. In the case of an address proof, if your passport also has the same address, you can take that document, or you can take a utility bill, a driving license, or a national tax ID card. So any of these documents can work as an address proof. So you got a simple ID proof and an address proof. Since these investors are not based in India, you need to do an OVD, which is originally verified documents. So there is a list of people who can do this OVD on behalf of the investor. So it could be either a bank official, a chartered accountant, a lawyer, could be the Indian Embassy, High Court judge, etc. Or maybe the AMC employee who is based in that sort of country can also do the OVD. So the documentation or KYC is fairly simple. And that's a large challenge NRIs have because they cannot do all these KYC documents. And the KYC rules in India have becoming stricter as the time becomes, and that's the right way to go. But for an NRI, it becomes difficult. So here it's a very easy way to do documentation. And maybe on your point on NRE, NRO, etc. Through the GIFT City route, GIFT City as per FEMA is not considered a part of India. And hence, if you see, one of the currencies not allowed to be traded in the GIFT City is INR. So you always trade in foreign currencies. Yeah. So an investor can essentially transfer money from any foreign bank or maybe his NRE account or an FCNR account to invest. So he doesn't need an NRO account or a PIS account, etc. to invest. He can use his existing Bank of America account, Emirates National Bank, Bank of Singapore, whichever bank account he has in the world to invest. Money goes back to that same account. Repatriation also is sort of fairly simple.
Okay, now it's been a year since you launched your inbound AIF.
Correct.
So what kind of returns has it delivered?
So actually markets have not been sort of great for the last year or so, but let me tell you how the sort of experience has been. So we will complete a year of performance. So initially a lot of people had this question, why GIFT City? What is GIFT City? And I used to travel across the world, try to educate on GIFT City. I can tell you a sea change that I can see now. In a year's time, a lot of NRIs already know about GIFT City and the convenience it is providing to investments. So that question of what is GIFT City, how does it work, has been arrested to a large extent. And of course, podcast and all this education that all of you guys do help take this forward to all sort of investors. So this education is sort of must. So it's becoming very easy for them to invest. And the advantage, I would say, like we already covered all the advantages on how that is easy for them to invest. What we've seen is that in our fund, 25 to 30% of the money that we've got is actually not from NRIs. It's foreign nationals. So you've got foreign nationals from Italy, from Saudi Arabia, from Hong Kong, Australia. Now, for a foreign national to invest into Indian market is absolutely not possible because he has to take a PAN card, he has to do custody arrangement, he has to do advanced tax filing in India. India is beautiful, but not so much that any foreign national will take so much pain to sort of do investments into India. This is the easiest way for foreign nationals to invest into India. And hence, I would say the use case for GIFT City is not only NRIs, but foreign nationals and foreign companies and the ease that they can invest into India.
Okay. Final question on the inbound part. How do people reach out to you? Like if somebody's watching this, they made up their mind, what's the next step for them?
Sure. See, essentially GIFT City products are PPM, private placed sort of products. So essentially we don't do large marketing because idea is it's a relationship between AMC, the distributor and the investor. So there are, of course, investors can go and touch base with their distribution partners and they maybe, if they are already working with Mirae, they can come back on this. We have some details on our website which the investors can go through and they can touch base with us and our teams can sort of help them make the decision making or they can come to the distribution. So both these channels are there through which the investors can understand a little bit more about GIFT City. Idea is that we don't market this product, but the idea is to at least educate people on the concept of how GIFT City can make their life of investing simple.
Okay. Now let's talk about the outbound AIF.
Sure.
So you're just launching it. It's been...
No, we've launched it and we just did the first close on end of the month of July. So it's been a small time of pre-marketing it and we are successfully did the first close. and the fund is now open for ongoing purchase.
So what is the AUM of the inbound fund and the outbound?
So in the inbound fund is roughly around 30 million is where
Dollars.
$30 million is what the AUM is. As per the regulation, the outbound fund has to do the first close when it reaches a minimum ticket size of 3 million. So once we reach 3 million, we did the first close, and now we open for fresh subscription. And it's an ongoing product. Both these products can be scaled to a couple of $1 million funds. $200 odd million is what we are targeting to raise in both these products.
Right. So I think this is a slightly different concept for Indian mutual fund investors because they are used to open-ended schemes.
Correct.
Now, in this case, you are raising money gradually over the course of the year. So you're taking commitments right now.
Correct.
It's a bit like how private equity works.
Correct.
And it's a closed-ended fund, so people can't just get out whenever they feel like it. You have a tenure of
3 years.
3 years.
Yes.
And this also brings tax efficiency. So
Correct.
Could you elaborate on that?
Sure. See, I think one of the ways we have to look at investing is we have to start looking beyond India. India is actually just 5% of the world's market cap. So if you look at only India, you're missing on 95% of the investment opportunities available outside the world. Now look at some of the things which are emerging very large globally, which is, themes like semiconductor, AI, disruptive material, blockchain, etc. Some of these themes have not even emerged in India. We don't have listed companies in this space. So global investing is very, very important because it gives resident investors access to the best markets, best companies, and best themes globally. So I would say investors need to have 5 to 15% of their portfolios at least invested outside. There was a beautiful way that they could invest through the mutual fund route. Unfortunately, over the last couple of years, because of the limit issues, they have not been allowed to invest outside India. The fund houses have not been allowed to invest outside India, and hence investors are not getting access to some of these beautiful themes, stroke companies. So GIFT City is giving you an access to invest globally. The only difference I would say compared to mutual funds is that when you invest through the GIFT City route, you have to invest through the LRS route. So you have to go under the LRS route, which allows a resident Indian $250,000 per person per year. So an investor can come through that route. But there is a lot of flexibility for family offices and institutions because they can invest through the OPI route, which allows them 50% of their net worth as per their last audited balance sheet.
Sure.
So the flexibility is high. So not only they get access to global investing, they can come through the LRS route, invest globally, and take advantage of some of the best sort of countries, stroke themes available globally, and de-risk the portfolio to not only India, but investing in some other markets which are sometimes doing much better than India.
Absolutely. So Vaibhav, if you can tell us which markets your outbound fund is investing in and in what percentage roughly?
Sure. So maybe thanks, Neela, you got an interesting chart through. But see, India, like I said, is just 5% of the world's market cap. The largest geography, if you were to see, is US. So US is about 60% of the world's market cap. So it's a market that you cannot miss, and you can see a lot of innovation happening in the US market. So that US market is a very important market. You see China and Hong Kong. A lot of Chinese companies are listed in Hong Kong. So China stroke Hong Kong both have about 15% of the world's market cap, and that remains another sort of geography which is very interesting. And maybe after US, best innovative businesses are now based in China. Then you've got a very interesting belt on Southeast Asia where you've got Japan, you've got Taiwan, and you've got Korea, where a lot of interesting semiconductor related businesses are sort of available. So that's again a very beautiful belt of businesses. And then you've got the European region where again you've got at the moment a lot of geopolitical risk, but a lot of manufacturing businesses are based in the European zone. So these essentially what we are looking at is Canada, US, Hong Kong, stroke China, and the European markets through Luxembourg are sort of 4 different geographies that we are looking at investing. And that Mirae Asset being a global fund house, we've got presence in 15 countries across the world. We're trying to leverage best of the managers in these countries, best of the themes and funds in these countries, and give Indian investors access to all different markets and themes.
Right. So your GIFT City fund will feed into other funds in the US.
in US, Canada, Luxembourg, and Hong Kong.
Right. And these underlying funds may buy and sell stocks as per the view of the fund manager.
Correct.
But since you're not doing it directly, so there is no tax incident on your investor, at least until the fund matures, which is 3 years in duration. After 3 years, do people get back their money or they can extend if they want to?
So Neil, good. Thanks for asking it. And you had earlier also asked on taxation. So I'll tell you, taxation is a very, very important element when you start investing. Because when you want to look at returns, you have to look at post-tax returns. Now, essentially, the way we've structured our product is that we wanted to bring complete tax efficiency for investors. So if we invest from, say, the GIFT City and directly buy stocks, and we sell those stocks before a 2-year holding period, the tax rate is significantly high. It goes up to as high as 42%.
Yeah.
So it's a serious impact on investors' wealth. What we decided is why don't we buy funds? And the funds can internally buy stocks and they can keep selling stocks. And there will be no tax the funds will be facing in their countries. So many countries of the world like Hong Kong, Singapore, Dubai, Luxembourg, etc. don't have concept of capital gains tax for funds. And hence there is no tax. Like in India, mutual funds are a pass-through vehicle, so they don't pay tax on buying and selling.
Sure.
So essentially the funds there, when they buy and sell shares, they don't pay tax. We have to ensure as a fund, our holding period is greater than 2 years. And that's why we created a structure of a 3 years close-ended product so that investors will for sure hold for a more than 2-year period. And after 2 years, we need 1 year period to make sure that we get an exit at the right time for investors. Because after completion of 2 years, you don't know, market might be slightly low and you might not get the right exit point. So you will give yourself time to exit at the time you want. After that period, we have the flexibility of redeeming from the underlying funds and returning money back to the investors. But for sure, after the final close of the fund and completion of 3 years, all the money will be returned back to the investors because that's the mandate that we want. And essentially, when you invest outside India or even India, equities by nature would say that you need 3 years sort of a time frame to invest. So we thought 3 years is a minimum time frame for you to make an investment. And with tax efficiency also, working with a 2-year, 3-year structure, we said, why don't we create it as a close-ended product?
Right. But it will mature in 3 years. So if I want to extend it, that's not possible.
No.
Okay. And what you're going to try and do is minimize the switches between these underlying funds, right?
Correct.
Between a US and a Hong Kong. Or, sorry, you don't have an underlying fund in the US. You have it based in Luxembourg, but it might be buying US stocks.
Correct.
Okay. What is the expense ratio for this fund?
See, essentially, again, the idea is to give access to retail investors. At the moment, they don't get access. I know a lot of retail investors are buying through broking platforms directly stocks. Now, if you look at being able to buy stocks, including the broking fee, the custody fee, the currency conversion, and the other cost, investors tend to pay about 3 to 4% as the cost. Plus, you have tax inefficiency. Plus, the investors have to have knowledge on which stocks to buy. Our idea is, can we give all of them to all this solution at maybe half the price? So the idea is to manage costs between 1.5% to 2%, and give you a good fund manager, good funds to invest, efficiency of all the other underlying costs, all built within the NAV, within the same structure.
So 1.5% to 2%
is the total cost.
Okay. And is there a regular plan, direct plan? Can distributors in India distribute this fund?
Absolutely. So there is regular plan, there is a direct plan. A lot of institutions would want to invest directly, so they can invest directly, in which case the costs are significantly low at maybe only about 50 basis points, something of that sort.
For very large ticket size.
For very large ticket size investors.
All right. Now this is still an AIF.
Correct.
I think also a lot of retail investors in India are waiting for a retail fund from Mirae.
Right.
When is that coming?
Yeah, so the idea was we wanted investors to first get a flavor of AIF, understand how LRS transfers happen, how you need to transfer money, how you can get global exposure to the LRS route. Maybe a month or two, once they get complete comfortable on the process, right from not only investors, but even distribution partners, our sales team, the entire ecosystem developed, we thought that's the right time to launch a retail fund. So I hope to launch sometime in September. Mirae Asset should be launching a retail scheme, which will allow investors access to best global markets and themes, maybe not at such a high ticket size, maybe only at about $5,000 as a ticket size.
Okay, finally, one thing I left out is what are the themes that you'll be exploring in this outbound fund?
So Neil, like I was saying, there are essentially 4 or 5 large themes. And this comes based on our discussions with various countries that we have a presence. One large theme that we see is semiconductor. So whether electric car sells or a normal car, or whether which phone sells or a laptop sells, doesn't matter. All of them need chips. And semiconductor is a very important theme, which is sort of not available in India as well. So semiconductor is a large opportunity which we want to tap. Second is AI. Now, enough and more reports are telling you that AI will help improve productivity by about 15 to 20% over 10 years or 20-year period. In fact, most of us, even in our AMC, we've set up AI teams, and all of us are working on completely automation, working with lean teams. So hiring people is difficult. You have to create automation within your system. So AI is a large theme globally and should play out over 10, 20 years. So that's a theme that we are very bullish on. Third theme that we are very bullish is disruptive material. Now, in India, when you talk about commodities which did well, natural answer will be gold and silver. And our life doesn't go beyond gold and silver. But the best 2 commodities were actually lithium and uranium. Lithium is used for electric vehicles and uranium is used for nuclear power, nuclear energy. Last few months, I'm sure all of us have heard enough of uranium and what happens with uranium. But these are 2 very important elements. So we didn't want to play electric vehicle directly. We thought lithium is a great way to play the electric vehicle boom. And the last is maybe blockchain. So a lot of people get confused between blockchain and crypto. Blockchain is not crypto, and neither do we invest in crypto. Idea is that we should invest in the technology which is used by crypto, by pharma industry, medical industry. So blockchain is going across industries. So that's emerging as a large theme. And maybe the last 5th theme which we like is the defense tech theme. I the last 3-4 years have told you geopolitical risks are happening across countries, and we need, each country is now sort of understood the relevance of spending a certain percentage of their budgets in defense, and they are strengthening their defense budget. So defense tech is another large theme. So these are 5 themes globally which we are very bullish on at the moment. Maybe the answer might change a couple of years from now, but we feel these themes will play out over the next 5-10 years, and hence we are very bullish on them.
All right, Vaibhav, thank you so much.